Okay, there we go. Welcome, everybody, from all around the world. Look at this room. Damn, look at some of these names. If I have to address you, forgive me immediately for mispronouncing some of the names. Some are just difficult for my Western tongue here. Hey, Ali, Stacy, good to see you. First of all, can everybody see and hear? Are we good on that end? You can see, you can hear. Yes. Hey, Tim. Hope you got my email. Actually, let me address that first because I got to do a little house cleaning. Or housekeeping, as it were. Innocentia, I hope I pronounced that correctly. Right, you're spelling it for me, but it's still, I'm just taking a shot at it. Hey there, blessing. Oduro. All right, yes, got it. All right, cool. Let's get the CFTC rule out of the way, and then I'll do the housekeeping. I'll explain a couple things, and then we'll jump into it. Nothing presented in the webinar, video presentation, vocally or visually, is to be taken as trading advice. So all content herein is for educational purposes only, and any trades taken which are influenced in any way by your participation is strictly at your own risk. And please do always use proper risk management. All right, so trading does involve the risk of loss of all or part of your trading account or more. So you got to use discretionary funds on this, and you got to play the game straight. Okay, no over risking. Especially if you're going to be doing my kind of trading with the swing, if maybe you're taking 2 or 3 trades in a week, or maybe even one for a week, I've seen it before. You kind of get sucked into the idea that you really need to go big on this one, and that's just going to get you crushed. So be patient, use discretionary funds, and use proper risk. Okay. Now, one thing I got to say, look, for the past couple nights, there's been really 2 or even 3 people in each one of the presentations. There's been Steve, and then there was me and Jim kind of in the background answering questions here in the chat. And then last night, Jim was giving his presentation, and it was still me in the background answering questions in the chat, like typing in questions. Tonight, it's just me. So you're going to ask some questions. Jacqueline, I'm sorry if I'm pronouncing that wrong. This is Doug. No Steve tonight. Steve was Monday night. But yeah, it's just me, so I'm not going to be able to answer a lot of questions because a lot of questions go by, asking about how to sign up and who to email and what about this indicator, what about that indicator. I'm not going to be able to answer a lot of that stuff, but I will start off right now, and I'll answer a couple at the end, general. If you're interested in joining and signing up, just send an email to info, that's info at beatthemarketmaker.com. Let me just write this down right here, okay? Info at beatthemarketmaker.com. That's it. Okay, just send one right there, and I'll get to you. And you're always dealing with me when you're sending in these emails. Okay, I handle all. I'm the tech guy. I handle all the administration and all that stuff on the back end. So yeah, that's me. All right. I think that's about it. Okay, so again, don't get offended if I can't get to one of your questions as we're going, because I can't stop the whole thing for that. Are there recordings? Eng, you're actually a student and you're in the DMR. Of course there's recordings for you, brother. I know you're in there. It's the same place they always are. Hey, Farzan, good to see you. Okay, so for the new people, I'm actually not going to adjust what I normally do tonight. I'm just going to roll full steam ahead, and I'm gonna do what we have been doing so you can see how I operate, what I'm going over currently, and my approach, and see maybe what you can gain. Now, some things are going to be confusing. I understand. I'll try and slip in as many rudimentary explanations about what I'm talking about as possible, but there are some things that I'm just not going to be able to fully get into. That you are going to walk away going, wait, what the hell is he talking about? It's just part of it's the nature of having a free seminar. There's going to be some things that normally would take an hour, maybe even 2 separate presentations to fully explain. But hopefully I'll give you enough context. Okay, so what we're doing here is I've set up this spreadsheet, and what we're doing is we're going through and we're taking a look at all the peaks that present, only peaks for Euro Yen in 2015. Now, there's a couple reasons for this that's very important. One, as Steve mentioned on Monday night, I teach this. I teach the swing, right? I teach how to swing, and I focus on identifying high probability peak formations for the explicit purpose of, one, being able to get into a trade and grab 100, 200, 300 pips, and not worry about having to be in front of your computer all the time. But there's a lot of you that have day jobs, especially if you're from the U.S., right? You have day jobs. You can't wake up to trade London, and maybe, you know what, you can't even trade New York too much because, well, you're at your damn job. You can't be looking at your phone all the time, okay? But maybe you can look at your phone every once per hour, once every 4 hour candle, right? And maybe you can trade for a couple hours every night if you just look at Asia. But through peak analysis, you can start to get a sense of like, okay, you know what, this is going to set up good within a day or two. Or, you know, tonight during Asia, this is probably going to blow off. So I'm good for today. I don't need to look at my phone, but I'll be back here at around the open of Asia. And that's what this spreadsheet is. We're going through all the peaks. We're listing out all the stuff that I teach that are present on these peaks. We're throwing them in here, and then we're analyzing. And by the end of, the project, we'll be able to see overall, like, hey, you know what? There was plenty in Asia that I could have got. If I only traded Asia, I could have got, 1,000 pips in the first 6 months. And, you can do some math and figure out, well, hey, you know what, that would have compounded my account. I could have doubled my account twice over just on that. Just relaxing, living my life, and trading Asia. Okay, so that's the focus. That's the overall scope of this project, or the purpose of this project. That's the word I'm looking for. So let's dive right in. Now, really quick, that shouldn't be, Anyway, really quick, I said I was going to address Tim Bowman's question. Tim had asked me about the trade tracker. Now, for those of you, a couple weeks ago, I said February 1st I would have the brand new trade tracker. Well, I forgot that the open house is this week, so obviously I'm not going to do the trade tracker tonight. Okay, but that will be ready for next week. Next week I will be doing the trade tracker presentation. We'll go over it. You'll see the brand new trade tracker, and we'll be good to go. Okay, and that'll be fantastic. If you're wondering about the old trade tracker, forget it. It's buggy garbage compared to what I got to show you next week, and you'll be good. So just be patient. Okay, so last week we ended off on this peak structure. Now let's go back over here. This was this peak structure. Remember, we took a picture of all the stuff that we marked out. Beautiful peak. Confluences, everything, we're good to go. And this is why we linked them, so we can look back and go, aha, check that out. Because guess what I did? I lost the damn template that I had drawn up. I lost the template. So here's what I'm going to do. I'm going to save a new template, EJ 2015, DMR peak analysis. I'm going to copy that. Save. All right. Now let's just draw something right here. Here's what I'm going to do. I'm going to set the templates in my homework helper. Hit that, okay, and then SH, save homework. That puts it in there. Yes, automatically saves. Let's delete that and then load the template. Let's see. EJ 2015 DMR. There we go. Okay, cool. So it's saved. So that's what we did last week. Now, we're going to move forward. There's some really great stuff, and I'm actually really excited that everybody's here this week, even though some stuff might confuse the hell out of you. There's a lot of fantastic stuff coming up in the next, couple weeks on this chart. I don't mean currently in the next couple weeks, like over the month of February. I mean on this chart that you're looking at. So we got done with this, and what happens? Well, we got our take profit up here at the quarter point, but now we have this huge news burden. What do we do? Okay, one thing, and I'm glad Jim was talking about this last night. When the news happens, it could do one or two things. It could set the stage for the next couple weeks, the next month or so. Like, oh, you know what? That's it. That's what the trend's doing. Or it can completely blow the market maker cycle up. And that's usually what it does. It blows the market maker cycle up, even if it does change the overall direction of trends for the next, say, month, 2 months, or even 6 months. It's still going to blow up that market maker cycle of 1, 2, 3, or 1, 2, and then hold for a day, 3, etc. Whatever. It usually screws things up. Now, when I see something like this is an outside structure. This is out and in. Okay? This right here, immediately, I'm just like, don't know. Have no idea what it's going to do right there. It just went out and in. This could just drop off for the next couple months because it did really trap all those traders, cleared the board to the north. Or they could stop dead right in this area and hold and work this area a couple more times, come back up. However, one of the things that telegraphs to me that more than likely they're going to retrace back into this area, and yes, we already saw it, we know, we're not, it's not cheating, just looking over here, this is something that's observable that you're going to see all the time. What's one of the things that's occurring on this chart right now for those that have been around, that I may look at and go, you know what? They're probably going to head back up. Take a second there, and I'm always asking questions and pausing. I'm kind of like Steve. I'll ask you the questions. I'll pause. I'll mute myself by muting the mic and allow you to answer. No, it has nothing to do with levels. It's one of my personal little things that I talk about all the time. First, I look to the here's a clue. First, I look to the left, then I look to the right. What do I get by looking to the right? And this is paramount. This is something that is huge on these larger structures that I talk about. You're close, Ike. Yes, it's Ike. It's num. I don't want to give it away. It does okay. It does have something to do with an EMA. Remember, first I look to the left, then I look to the right. Yes, Noma. Thank you. Hey, Noma, good to see you. Right, so we are getting what I call a moving average tug. Right, that's where a larger moving average is moving into the area of previous trap volume. Okay, now especially on the larger time frames, when I see these moving averages all fanned out, and Steve, I'm so glad Steve talked about what he talked about, just looking at the moving averages. They tell you so much. First of all, this tells you we're in a massive downtrend. Okay, we're in a nice big fat downtrend. If you scroll back a little bit, look, we haven't even touched the damn blueberry yet, and that's paramount too. We haven't touched the blueberry. The blueberry, right? 200 on the 4 hour. We haven't even touched that yet. So let's go back to where it was. So that's one of the things I go, all right, you know what? The blueberry is coming in, and you have to project forward. Steve was talking about that. We project. The moving averages, these quarter points, these yellow lines that I have on here, which is every 250 pips, previous trap volume, 50 pips below the quarter point. This right here is a previous week's high. These are all areas that are created by price movement where they're going to trap. So I know they just did this big fat move, but because this is coming into this area, my brain just projects out. I've seen this enough. You know what? They're probably going to go back up and screw around and hit into that blueberry. All right, so let's take a look now. Now my next available peak is right here. Now let's take a look and see what I like so much about it. Now, first off, it has that flat print going into the peak. Now this is very important. That flat print going into the peak is what I like to see going into any peak that I want to take as a short or long peak. Swing trade. Now, one little caveat. In one of the rules for this spreadsheet is that, look, it doesn't have to go for 5 days or 2 days or whatever. The only caveat is the move, your profitable move, your executable move, where you reasonably could have gotten in and gotten out with a take profit, not, like closing out because, that's the farthest that it went. Because you don't know that at the time. One of the rules is it has to be at least a 100 pip move. That's it, 100 pips. So what I like to see is, now we're going to clarify because I recently just started explaining it like this. Okay, what's one of the things about trends that we know? We know, like on an uptrend, it's higher highs, higher lows. And on a downtrend, right, lower lows, lower highs. What I want you to observe is, when does that actually stop? Well, how do you know? Well, really, one of the ultimate ways is, does a previous retracement, a previous pullback get retested? And it has to be in context. So let's take an example. Here's our peak low, right? So now we're going up, we're in an uptrend. We get a new high, a higher low, right? Higher high, higher low. Higher high, higher low, right? That's not the same as this. This, obviously, we get a higher high, but we're going to ignore this because when I see news, I just ignore it. I ignore the big pin and whatnot. This is obviously turned into an uptrend, so I'm trying to delete this, and it's not deleting. There we go. Everything turns into higher lows. The only time that a low gets retested is right here, but that's not context. The context is I want to be in level 3. I want to be at least in level 3. Looking, and I don't mean measure 3 times ADR. I just mean, can you see 1, 2, 3? Can I see 1, 2? This whole big 2 right here, right? And then a third push. I want to see some sort of third push. I want to see an observable trend, right? So our next pullback, this is all really one pullback. Is this higher than this? Yes. New high technically, right? We've moved away from this pullback. Now we got another pullback. This is a higher low. We move up. That's a higher high right here. This starts pulling back. It's pinning to this area. New high. Aha. Now they retest this area. This is what my brain latches onto. Okay, they've now come back into a previous area of pullback. The only thing that's missing that I really enjoy seeing, you don't always need it, but what do I enjoy seeing? On a peak. For those that have been around for a while, what's one of my main requirements on the H1 that I like to see in a peak? Okay, we got BLD, which is baseline divergence. Yes, divergence is the number one, right? This is divergent. We can see we got divergence going on. But as far as price action and, let's say, the moving averages, yes, Liz. Wow, good on you. Yes, interaction with the 50. And Kamar, yes, the MAT, the moving average tug, always coincides with the moving, or with the interaction with the 50. Almost always. Okay? So now we do have this pullback. We got a new high and a pullback to a previous pullback. Aha. Now the second thing, now the new highs begin to stop. In an uptrend, think about it. Higher highs, higher lows. Well, when that shit stops, that's starting to tell you, okay, the trend is starting to exhaust. And I don't mean like the old school trend, open up your technical analysis book. I'm talking about the market maker trend. That's when that stuff starts to exhaust. One of the characteristics of the level 3, that peak structure, is wide range swings, right? They're clearing the board. They're extending the high a little bit, maintaining the low. The opposite, if you're on a peak low, we're talking about a peak high right now. Okay, so now we actually get that moving average tug. The moving average tug is when, again, like I was projecting out up here, when a higher moving average, either the 50, the 200, or the 800, moves its way in. They're holding price long enough where the water comes up to meet it, right? That's the idea. Notice in all these pullbacks, when you get a lot of these pullbacks, it's price moving into the damn moving average. It's moving into it. It's spiking it, right? Oh, price just comes down, bam, smack, and moves away. The moving average tug is a unique scenario where price just kind of holds until the moving average gets into that area. Then the price gets to smack into it. Then what happens? It starts to bounce away, and boom, it just rolls over. Why? Because during a trend, what happens? Bounce off the water, oh, trap through the water, and this is where we're going to touch on this tonight, right? They just break right through the water. Oh, momentum, right? We're going to go short. Then they do their W, and they pull away. What happens? Boom, pull back, smack into the water. So now, you're a retail trader, you're not making that distinction. You haven't thought about this enough. You don't study the charts for 8 hours a day like myself and Carr and Jim and Steve did for years, and a lot of our students do, now. I know Jim talked about one dude who was doing 12 hours a day. I was like, whoa, take it easy there, buddy. But, a lot of retail traders don't have obsessions with the chart. They don't sit there long enough to notice the difference. Okay? So now, where's our entry? Let's take a look at this. As far as I'm concerned, my entry is right here. Now think about this. I'm going to stop kind of asking questions. I feel like I'm leaving, the newer people out. Now immediately, what I call transmuting down. Or not transmuting, transposing down. Most of you, even non-members and whatnot. I mean, Steve's stuff is out there. Most of you've all seen, right? The 50 equals the 13 down in the 15 minute, right? This 50 moving average on the H1 is the I'm sorry, the 200 down to the M15. The 13 right here on the H1 equals the 50 moving average on the M15, right? So immediately, what do I see? I see the same phenomenon right here that occurred right here, right? See, they pull away. Ooh, excuse me, a little burp there. They pull away. They get some pullbacks right here, and then they pull back to the same region. What happens? The water on the M15 comes up into there, and they start bouncing off the water, and shift. This is my first one. This is my first indication of an entry on the H1. Now, if you don't like that, your next available for me is right here. I don't care that it pulls back. I expect that it's going to pull back. In fact, when I see it pull back, I go, cool, I can scale in. But this one right here is where it broke this wall. Look at this wall. You see how they're maintaining price right there? Yeah, but it broke right there and this pin was lower. No. Look at this line. Look at how they're holding. They're pinning through that line. What is that line? That line is the 131 price line. It's a double zero, and that's what this indicator is. It puts a line every 50 pips. So 130.50, 131, 131.50, etc. Because they like moving in 50 pips, 50 pip increments. Within the larger time frame. You go to, if you're a 5-minute trader, you're going to want the 25 lines on there, and the 10 lines, right? Every 10 pips. But for me, I like these 50, every 50. So notice they're working that. They're maintaining an area of support. Like, man, look, it just bounced off the water. They're coming back down. Now we're going to go to the M15. Let's look over here. This is what they're doing. They're bouncing off the water. They're holding this level at this 50 line. I'm sorry, this double zero line. They're holding. They're a little bit below it. Not a big deal. Boom, they shift through. If I was looking at the 15-minute, this is where I'm in. Because as much as I like to look for a wall of price forming out of water, a W off the water, for example, that fails, all I need to see is the fact that they maintain this price line and then punched right through it. Now, here's a simplification, right? Because I know this seems like support and resistance. Okay, so here's a general rule. Or this seems like, oh, well, isn't this just like a breakout trade? You know what? Yeah, kind of. But here's the thing, here's the distinction. I only give a shit about support if the trend is up. I give a shit about resistance if the trend is down. Okay, so I want to trade support on a peak formation high. I want to trade resistance on a peak formation low. That's it. So here's my big peak, right? You can see it right here. Check this out, this M15 example. Now, if you were just looking at the M15, if you can think up to the H1, you could already tell, well, all right, look, this is market maker behavior. I can see 1, 2, 3. Then they gave us another push, 1, 2, 3. They created the high of the day at the end of the day. For those of you that study, right, that's kind of like that high of the week at the end of the week, huh? So they create that. Now, all of a sudden, you're getting that second leg, that third leg. You got a 12 trade right here. You could enter over here. Now, in this case, what am I going to do? Well, number one, I'm not going to take that short for very long. I'm not going to swing it. And for those of you that think that I only swing, I'll clear that up right now. No, I don't. I'll take stuff on the M1 and grab 10 pips, right? This is the kind of thing I can look at and go, everything's beautiful. I'm going to take this short. But my brain goes, hey, you know what? They haven't hit the water yet on the H1 because the mayonnaise right here on the M15 is the water on the H1. So I know they haven't hit the water yet, which usually, go back to the H1, let's shrink it up a little bit. Usually during a peak, you almost always have interaction with the water at the middle of your structure, right? So if this is a W, the middle of your structure typically interacts with the water. Here we have an M, right? You got two legs and then a third leg, but what happens? The middle interacts with the water. That's what I want to see. So back to the M15, if I was on a desert island that only gave me an M15 chart for whatever reason, I could still think, hey, this is the 200, right? That equals the 50 on the H1, so it hasn't interacted with the water yet. Let's throw up the hard right edge over here. So I'm going to move that over. What do I love about that? Look at that. This is technical failure. This is a bullish candle any day of the week. Then they trap through that tracer for a second time going into the US, right? That I love that. But what do I do next? I look to the left, then I look to the right. I look to the left, I see, whoop, they got a wall of price right here. They're creating support at a zone flip area. Let's draw that out. right? At this zone flip area, at that price point, that 50 pips, see that dashed line? That's 50 pips above the quarter point. They're creating that. So now, let me look to the right. I got that mayonnaise coming up. I'll just take it down a little bit above that price line. So where this is, basically. So I'll just take that. I'll grab, let's see, that down to there. Basically 50 pips, a quick 50 pips. And this is what Steve was talking about back in the day, the original course. This is your peak, and boom, grab your 50. And what about taking it for the swing? Well, I want to see interaction with this water, the water on the H1, which is the 200 here. And then I want to look for some other leg that has trap through, like a visible, obvious trap, or what I call a failed pattern. And the failed pattern is the failed bounce off of the water. And what are they doing? Well, they're showing the trend is going to continue. The trend is too strong. We're bouncing off the water, bouncing off the water. We create this support. We're in peak formation high. Where am I looking for support? I'm looking for support. Well, there's only one place you can look for support, at the bottom. But what's the word I'm looking for? Or what was I looking for? Oh, where am I looking to trade a form of a breakout? On the bottom of an upper trend, an uptrend, a peak formation high. So now we have the peak formation high. We're getting some sort of support. It shifts away. Let's go back to the H1. If you're not interested in that, you could take your next entry, because if you're just trading the H1, maybe you don't like that because, oh, I got a pin. Understandable. A little bit more experience, you won't give a crap about that. But now the pin fills in. As soon as you get a pin like that, because look, retail traders know that a pin means, oh, they just trapped to the bottom. That's the Bulls and the Bears just fought that one out, and the Bulls just won. It's going to go long. This is just a pullback, and, the volume, and blah, blah. They know about trap volume or stop hunts and stuff like that. So if you're up and you get this big fat pin in context, and then they fill it in, and you have 50 other things to back you up, well, look, that's your signal. Do they pull back? You got to deal with a little heat. Okay, that's fine. But I don't care. If you do care, right, you're still new to the game, well, you wait for the 1350 to cross after you see this, because now we have additional confirmation. Look, everything just failed on the 15. They ran it down, and now they're bouncing off the water. We get an H150 bounce, right? You could take it here, pull back pending, right in here, or right there. And, of course, all these opportunities to scale in as well. Now let's see, from that original entry down to the bottom, we got 176. If you're only taking it to the quarter point, that doesn't really qualify for our spreadsheet. But if you went 50 pips below, which is one of the target price points that I teach, what happens? You look to the left. You always got to look to the left. Where did they trap previously? Okay, look, trap move end of week. They started false move week beginning. They trapped through the water and the 200. Of course, they're going to stop there and be jerks. So you know what? This is a pretty strong move, midweek reversal. We're going to head on down, and I think it's going to go through everything. I think it's going to hit here. This is a good price point. I'll put it 5 pips in front. Boom, you have your 100. In fact, you have your 120. So let's take a look. What's the dates over here? So here is March 26th, 2015, boom, 03.26. That's a Monday. Of course, this is a peak because our only pattern is an M pattern. TDI, what do we got on the TDI? We have baseline divergence. The baseline is sloping down while the water is still sloping up. We have classical divergence, obviously, right? Here's your first leg, here's your second leg, here's your first, your second, and then even your third leg over here, boom, and then it rolls over. So we'll just go with classical divergence because BLD, yes, we do have baseline divergence. What session is this? Well, let's go back, take a look at this, and that's right. I wanted to work time, edit, 1500, would that be good? That should be good. Why don't you update for us? Yeah, Anthony. Just remind me again. Okay, so really, our initial entry based off the M15, look at that. I'll take that any day of the week, right? And actually, that would be our on the H1, right? Remember what happened? It shifted down, then it pulled back. And then you had that pin that I said people would be worried about. Okay, so all this, that's right there. That's my main entry, and I want you to think about this. We're going to put that entry there. We're going to list that as our entry. Simply because that's coming off the peak. This becomes a level 1 trade. We're looking for peak trades. And I want you guys to get used to seeing how this could be a fantastic entry despite the fact that, well, it had a big pin. Because it was giving you all the signals of the market maker behavior. Everything is here. Okay, so this really was Asia. At the end of Asia, but it was in Asia. Inducing the shadow box, no, so we're not even going to enter it, no. Candle time, we're not worrying about those. So the overall move, just do 120, right? Structure segment. What structure segment? Now, really, we got to look and see. This is part of a mid-structure mirror. For those of you that have been around a while, this is part of a mid-structure mirror. Not a reset. We're just going to do mid-structure mirror. Cycle synergy. Well, is it part of a structure, right? The second leg of this peak, and it's the first leg of a mid-structure mirror. Cycle synergy, midweek reversal, yes. So this is a midweek reversal. Now, the cycle synergy is, once again, for those that have been around, and the first line for those that haven't, it's when you have the visible part of a structure, a visible executable part of a structure. What does that mean? Part of a structure. First leg, second leg, or head and shoulders. That's it. Or a second shoulder, sorry. First leg, or second shoulder. Okay? Tiva. Not really. Not on here. Not on the H1. There is stuff on the M15. We're not filling that in, so we're going to leave that. Okay? Not even with the price action. It's just not really there. Failed pattern. No. Failed pattern moving average. There is on the M15, but we're going to leave that. Previous weeks, high or low. No. It didn't trap through it. Interaction with water. Yes. Wall of price, Matt. Yes. What other confluences? What other confluences do we have? Okay. We trapped it through the quarter points, all that good stuff. There's not really a whole lot of other confluences that I would rush to put down because we're trapping through. We're pretty much into the next quarter point already. It's not, So I'm going to leave it at that. Tiva is technical validation. Remember, Steve always said they validate the technicals. They'll move or hold price in order to get your moving averages to do a certain thing or to get your RSI to do a certain thing. So the moving average tug really that's technical validation. They're going to hold price until the water gets up into there. They're going to bounce off of it. And you're now technically validated. You look over at your how to trade, an uptrend book and you go, oh, yep, pulled back, bounced off the water. Cool, I'm going to go long. They validated the technicals. Now, I refer to it strictly in terms of this over here, RSI, because on RSI, during a trend, if you haven't noticed, the water is the same as this midline on the RSI. See this dotted dash line. Anytime it hits the water, it's hitting or trapping through the static, the fixed 50 line over here, right? Bounce off the water, bounce off the static. Bounce off the water, bounce off the static. Now, technical validation, when I talk about it, is when they bounce off the water, and TIFA, technical failure, is when they bounce off the water and then they fail, right? So, that should make sense. Technical validation, aha, and then, oh shit, it didn't work. Think about if you're a retail trader. Aha, my technical analysis got validated, and then immediately it fails. That's technical failure. So here's a good example, and we'll get into this in just a moment. Here's a good example. If you're a retail trader, what do you know? The trend is up, 50 is above the 200, we're going long. What happens? They bounce off the water, they bounce off the static, right? See this W right here? It coincides with this W. Oop, W, we're going to head up. Look at that shift, man. We're going up. The trend is just going to go on forever. Boom. Screw you. Thanks for your money. thanks for looking down at the RSI and the MACD and the CCI and watching it bounce off the zero and the midline and all this crap. So that's what they do. They validate the technicals by bouncing, because they know the water and the static line up. So all they got to do is bounce off the water, and all these oscillators that have a midline that coincides with the water, well, they get validated too, because this was now a W, and then boom, peace. See you later. Thanks for your money. I'll see you next week to do the same shit to you again, because you're just going to keep following it. So I appreciate the time. I'll give you a week. You can refund your account. We'll do it all again. Okay, so now let's get back into it. So what happens here? We get this peak. Okay, so we left it at that. I'm going to take a screenshot of this. We really didn't have many other confluences that we needed to write down, so I'm just going to take this screenshot right here. Let me just lock all this stuff up in. I don't know what it was. And then I will mark this as our take profit, and then I just use my homework helper. I take the screenshot. We're going to go over here. We're going to link this. Where the hell are you? Oh, there we go. Link. We're going to go into the URN, and now I have my screenshot. Let's test it out. Boom. Now we have this. That's that peak. We're good to go. Next one. The next viable peak is right here, and I'm going to give you all a minute because I got to fill up my water again. Those of you that are new, those of you that have been, paying attention and whatnot, and I know I talk fast. I know there's language barriers, so I apologize if there's a lot of confusion on this, but, I tend to just go, because usually I'm fired up on coffee. Okay, so what do we got here? Why is this an awesome peak? What are all the confluences? 3, 2, 1, go. Okay, cool. Man, Kamar is on it. Okay, cool. Somebody else said, do you have any videos on how to do backtesting? Yes, actually, I do. But actually, next week, I'm introducing a revamp of an old program that I created for backtesting, which, I'm going to cover all that next week. Might even be a 2-week series. But I even other than that, I have videos on how to do homework and backtesting and charting, and it's great. Good to hear, Anthony. Okay, so we got supported flat, right. Okay, so there is some of that. There is some of that wall right there. They start creating that wall, and again, now we're in a downtrend. We're looking for lower highs, higher lows, lower highs, higher lows, lower highs. Oh, all of a sudden, hey, sometimes they get blown out. But what's our context? Our context is we want it to be level 3. If we're in level 2, you could look at this and say, well, look, they made a head and shoulders and they're just trapping through there. Okay. I can see that, because look, let's throw up that hard right edge again. And they very well could come back up into this area. Right? That 13 is crossing that 50 again. But it's a little too volatile for me. It's too pinny. Pin. They're holding. Right? Well, maybe you don't see those pins. Maybe you think you see this and you're like, oh crap. Look, that's gonna go long. It's not. I don't like it. Right? We're at a 000, 130. Look at how they're handling this 130 000s, man. They're just blowing through it. They're pinning. They're holding. They're chopping back and forth. They aggressively stop dead at this pullback, out and in. Okay, cool. But I expect them to work that 130. But let's say you did take that. Okay, immediately, I'm going. All right, you know what? I don't like that very much. So you close out. You lose a little bit. No big deal. Then you start seeing this. At this point, I'm out. I'm not going short at this. And there's no confluences here. There's, I guess you could look and say, well, isn't that a Head and Shoulders 50 pips below the quarter? Yeah, but again, you're trading back into all this nonsense without there's not too much of what I like to see, right? There just isn't. It's not as clear. What I do see is that they just created this weekly low, this previous week's low, right here. And we're in level 2 as far as, when we got the 5,200 cross. We know level 2 sometimes looks like level 3. It often looks like level 3. That's why Steve always hated trading it. If anything, we get that 1350 cross, I want to see a pullback and a trap off of there and a solid move with the baseline bounce. They don't trade it back long because now, check it out, I'm looking to the left, I'm looking to the right. Oh boy, we could be getting a mid structure down here. It's ugly. Not every mid structure and every structure is tradable. So this very well could be going back up into there. So I'm going to wait for that 1350 cross to give me some sort of safety trade or H150. All right, now, it doesn't really give it to us. I'm not, this star right here, okay, that's tradable, but we're not talking about that. That's not a peak. Now, this over here is the peak that we're talking about. So, yes, we have this wall of price. They do break through it, right? I really would have liked if they actually, in the moment, right, I would have liked if they waited until this water came down and then they just kind of bounced off it and shift through. But we're trapping through the previous week's low. The previous week's low was created on Friday. It's a very important thing that I look at. The previous week's low was created on Friday versus when it was created on Wednesday or Thursday or Tuesday. A previous week's low created on Friday or a previous week's high created on Friday holds a lot more weight with me. So, previous week's low created on Friday. Trapping through the previous week's low. Wall of price. This is what, when I really say a wall of price, this is what I mean. Remember when I made the distinction a couple weeks ago, or about a month ago, that look, actually it was 2 months ago. It was before the winter break. It's when all of a sudden, look at that, boom, 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 and then they just put on the brakes. Boom, boom, they hit the brakes over and over. Right there. And then, look, this is level 3 behavior. Wide range swings, right? They trap right through, then what happens? They come to it, bam, 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 bam. They hit it 3 times right there. Look at those lows. We're gonna go in. Actually, we're gonna go to over here. No, I gotta do the SD. And then we're going to go over there and do the GD, go to date. Look at that. Trap through, we're going to hold. Boom, 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 boom. Down in the M5, the M1, this is probably 1, 2, 3 swipe down into there. Nice W, and they pulled away. This is a massive wall of price that very much interests me because I'm already projecting. Let's go over to that H1 again. You dingleberry. Great. There we go. That's why I have that hotkey. We're already projecting, because this blueberry is coming into the range, that we're probably going to get some sort of movement back up to create what? A cycle. 1, 2, 3. 1, 2, 3. Another peak. And then, check it out, for those that are new, I'm big on, whoops. Why do you keep doing that? I am very big on the larger structures. And then, for example, what is he drawing all these lines for? If this is a first leg, and then this is the middle, maybe a second leg over here on the H4. Let's take a look. Think about this. And for those of you that have been with me for a while too, we got to go through my thought process. Think about this. So far, we're pretty much right here. That's this area. And right here. Potentially this area. What did I say? This could be the middle, and then we come all the way down. This could have been just a continuation, like, it's going to hold and then shift through and bounce. Because what do they do during downtrends? They keep showing you W's. We're heads and shoulders. They keep showing you bounces to the north side, right? Bounce off the mayonnaise? Haha, just kidding. Come down here, give you a head and shoulders. Oh, just kidding. Oh, we're going to hold here. This looks like a nice multi-pronged W, and then we're going to shift through. They very well could do that, right? We're right here. We don't know what it's going to do yet. So we could be in this segment of the market right now, right around here. It could do this, right? But what else could it do? Well, let's take a look. What's one of the properties of a larger structure that I talk about all the time? That would be the mid-structure mirror. What the hell is the mid-structure mirror again, Doug? I'm not really sure. Well, if you got a W, first leg, middle, let's draw this around, middle, second leg, boom. The middle is almost always the reverse of the larger picture. So the larger picture is a W. What's the opposite of a W? An M. Almost always, you're going to get the reverse in the middle of a larger structure. Even on a smaller structure, you look down to a certain point, you're going to see the mirror, reverse. So now, once I get to this area, check it out, boom, go over here. Once I get to this area and I'm seeing the wall of price, and remember I said, I recalled a story about Steve, I don't know, about a month and a half ago. One of the things that he had said way back in the day was that wall of price trumps a peak formation any day of the week. Now, here we're already in level 3. We're going to be heading, looks like we're going to be heading long. But if this happened right here, we just had that dead pan wall of price right there, I would have been interested in like, oh, you know what? I guess that's as far as we're going to go. Once that 1350 gets back up, I'll be looking for my pattern long. And, of course, looking to take profit in this area. Why is everything freezing up all of a sudden? My entire screen just froze up. I have no idea why. Oh, there we go. I have no idea what that was about. Anyway, yeah, Gordon says it must be demons. Okay, so let's continue on this. So we have the previous week's low that was put in on Friday. We trapped through wall of price. They did this one out. Look at this little outside structure right there. Just boom, right? It turns into a big head and shoulders. We got that rapid fire hitting of the previous wall that was put in. They retest it. Then we got a star pattern. What happens on that star pattern? Anybody see down here the baseline bounce? Okay. We're going to go the green right here because it's long. So we got the baseline bounce. Then it heads back up. And what do you know? Check it out. Right up to that blueberry, and this is what I'm talking about, the moving average tug, especially on these larger structures. You see some peak over in this area, and then it starts heading back towards that peak. Look back up. You see that blueberry coming into that area? Yeah, there's a reason. Because now they get to test that blueberry, widen the spread, pick up some orders, right? And work their ass back down. So that's what we got right here. This is beautiful. Now this becomes the mid-structure mirror. Remember, we just talked about this. Your mid-structure mirror, or your mid-structure, is usually the mirror of your larger structure. So we're looking at this larger W. Well, what do you know? In the middle, we have now, check it out. I'm going to delete some of this. I said I'm going to delete some of this. Don't we have a big fat M working out as this mid-structure? Yeah? No? Okay, if this is a big M in the middle of this big old W, what do we have down here in the middle of this big old M? Another damn W, right? It's all fractal and it's all mirror. That's why I call it the mid-structure mirror. This is the mid-structure of this big-ass M, which the big-ass M is the mid-structure to this big-ass W. I love looking for it. So when they put on that brakes, I switch. Because, yeah, it could have headed down and created the second leg to this larger structure, or they're going to do it again. Now, because I see that blueberry coming into this area right over here, and, you know, I teach the moving average tug. It's just what I look for. It's one of the biggest criteria on everything that I talk about. I immediately go into that switch up mode. Like, aha, it's headed back up. Looks like it anyway. Where's our entry? Well, our entry's right here. Why? That's identifiable. Star pattern. That's the star. I know. Oh, it's 2 candles. Doesn't matter. It's got the behavior. It's a star behavior. That's why I call it star behavior instead of star pattern most of the time. Right? Because this could be, look, all a star really is, the star pattern. It's a 3 candle pattern that really is just momentum out, hold on, momentum back in. That's all it is. So you got momentum out. If they hold for 7 candles and then momentum back in, right to where they started, that's still that star behavior, right? Because Steve always used to make fun of it, right? And so that the doji, right? It's an indecision candle. It's like it's not indecision. It's just them holding it long enough to get the money that they need. They're just holding it there, waiting for people to go, oh, I guess it's going to continue. It's going to keep going short, going to keep going long. Well, the market makers, their most valuable weapon is time. And why? Because they're going to hold as long as it needs to take you to make that decision that they want you to make. All right, a brief little aside there. So we have this star pattern over here with the baseline bounce. Right, we had the baseline divergence. Water is sloping down. The baseline is sloping back up inside the lower momentum line. And we projected that we got our cycle. This is our peak. We projected out, aha, this could do the larger structure, the mid-structure mirror, boom, we're good, blah, blah. Okay, so this qualifies. So let's take this over here. What day is this? April 2nd, right? So 25th, nope. Let's, I turn off the damn number lock? Of course I did. 2015 04-02. Okay, so that's Thursday. Condition is peak, right? Pattern. Well, you could just call that a W. You could call that a head and shoulders. That's up to you. Let's call it a head and shoulders because really it is TDI. Okay. Do we have classical divergence? Well, yeah. This is that first leg. We got divergence all day of the week. All right. So we got CD. We're not really getting into the well, yeah. We have baseline divergence. Yes. We're not really getting into the chopstick divergence. Any of that. What session is that? Anybody? Just from looking at the chart. What session? Stanley, you can ask. Sure. Yeah, this should be easy. I shouldn't see a single incorrect answer here. Because these tracers right here, that's when the day changes. Right? So we're only 1, 2, 3, 4, 5, 6. Yeah, this is Asia. It's getting towards, the end of the blue box, but Asia. That's it, okay? We got Asia. Oh, Asia's pulling ahead. Inducing the shadow box. Well, no, we'll take a look. We'll go over here, do my SD, right? Save the date and the time. We'll go over to this next right here, hit GD, and we're pretty much right there. Okay, so this is right here. This is right in this area. And notice the M15 is perfect, right? And we talked about this before. The TDI is kind of garbage, but look, this is beautiful. So, but it's not, they didn't induce in a shadow box. The entry is not in a shadow box. So what's the move? Well, let's check it out. No, I didn't want to switch to the H1 on that one. While it's going back down. Yes, 2015. We're going through 2015. Why? It's important to take a look at the past in order to know the future. And Jim just talked about this wonderfully last night, right? It's not only important to look back at the past because this stuff happens all the time, and take that to learn the future. It's also an important reminder that once you go back to like today or tomorrow or the week a week ago, you look and you go, wow, that's the same stuff I just marked up from 2012, from 2008. That's the same stuff I marked up from 2015, right? Oh, I'm sorry. The dude thought it was a past webinar that he was watching and recording. No, we're here live. We're just analyzing EJ in 2015. Okay, what was I? Oh, the move. We're looking for the move. Okay. Now the move is, we're going to measure right to about here. Let's see if that one lined up. Now, here's a couple options. You could just hold it, right? One of the things I'm going to do, I look to the left, then I look to the right. Okay, well, we have an option. Most likely it's going to hit the blueberry. But remember, I don't know if you guys, I talk about this all the time, but for those of you that haven't read the book, Reminiscences of a Stock Operator, that should be like one of your Bibles. And he always talks about, well, he doesn't always talk about it. It's one of the quotes in the book. And he says, the first eighth and last eighth of any move are the most expensive eighths in the world. Which means if you're trying to catch the absolute high and the absolute low, look, you're doing it wrong. And I'm not talking about like, down in the M1 and the M5. We got people catching the absolute highs and the absolute low. I'm talking about the larger moves. You get to the daily and unless you're really looking at a trend and you're starting on the daily in the H4 and you're dialing down and you're trying to be Mr. Fractal, but at that point you're doing it for yourself. You're doing it so like, you can go to a cocktail party and be like, yeah, man, I caught the absolute high. When you're looking at this, especially you're swinging, you're looking at the H1, the H4, you ain't got time for that anyway. So you have to reasonably look at areas that it's going to reach. One of those areas could be right here, right? The zone flip area. And hey, what do you know? 50 pips above the quarter point. That's an area I always talk about. And what happened? It hits right into that area. It smacks right into it. Okay, we could put it right down at this pin right in front of there. Boom. Takes it out. Good, you're out. So now your entry was right here. You got out right at that line, 147 pips. Your next area, we've talked about this before. The volume body is the pins. We're going to move that a little bit in front, right? About 5 pips plus spread in front. Eventually, obviously, it gets taken out. But let's say you held on to this because you're like, man, it's going to hit that blueberry. What's a reason you might manually scale out right there? Or, manually scale out or just close. Just, I'm done. Not so much the mat because look, if you're talking about the blueberry mat, the moving average tug, then most likely it's going to hit it. Okay, one of the reasons. You son of a gun, you. It's Friday. We just had a massive break with a retail continuation candle. Look at that. The massive we're going. That's a going long hammer, baby. And then it starts to pull back. It's getting, it's getting close to the end of the day. It's Friday, trap move end of week. I'm good. I'll just close out there. There's a couple ways you can handle it. Me, I prefer looking to these zone flips, looking to these last places that people got fooled where they got trapped. It was like, oh, there's just going to be a bounce. It's going over the water. People are scaling in early. They want to get in. Oh, they're missing it. Okay, so I'll look to the left and target these areas, but also look to the right, okay? And it's Friday. If this was occurring on Thursday, I'm going to wait and see if it's going to hit that blueberry. Now, let's do this. Okay, and we'll draw this. We'll just do the confluences here. Actually head and shoulders. Wall of price, not being offensive to any Italians when I write this. Okay, second shoulder. BLB, that's the second shoulder, baseline bounce. Okay, we'll just do the star right here. I'll hit shift enter. This will give me a new box. All right, what else did we talk about? Okay, baseline divergence. What else? I will leave it at that for now. We can always come back and edit it. And also, I want to point out, you notice this area right here? Oh, look what they did. One of the previous lower lows during the trend. Just right down there, put on the brakes before they actually hit into this area where people may still be trapped, but they're looking for it. Oh no, come on, go. This momentum, right? Think about this big red candle. And then this was red. It turned inside out. That got so many. Man, if you can see the trap volume in the market, and I always used to say, look to see the pain in the market. What I used to say, what was my little catchphrase? We must train to see the pain in the market, right? So I don't just see a pin right there. I see like a divorce. I see a talk with the child that says you can't go to college anymore. That's what I see. I see a late payment on the car. I don't just see a pin and go, somebody lost some money there. I see the pain. I see the frustration. Okay, so check it out. Now let's just go for the quarter point move. Okay, 113. We'll call it even. We'll go for the move where we went in front of that 50 pips above the quarter point. It's one of the areas I talk about. We look over here. We got the last shift down. Maybe we don't want to really test it out and see if it's going to go up and hit this area, even though we're pretty confident it's going to go up, hit that blueberry because of the larger structure, because of the blueberry coming into this area. the moving average tug. We're pretty confident, but we'll go with that. So we'll just call it 150. We'll call it 150. So we'll throw in 150. Many more pips you could have got out of that. Structure segment. Yes, that's a mid-structure mirror. Okay, so we got a mid-structure mirror. Let's do it capital. Keep it nice and... All right, is this cycle synergy? Midweek reversal, right? It's part of the early part of Thursday. From late Tuesday to early Thursday, I still qualify it as midweek reversal. So, yeah, we have cycle synergy, midweek reversal. Is there any technical failure? No. Technical validation? Not really, as I see it. Look, we're looking down here. No. Okay, failed pattern? Not really. No. Previous week's high or low? Yes. Now, we're going to put a little asterisk next to it. Whoops. Because the asterisk means the previous week's low was put in on Friday, which holds a lot more weight. A lot more than just a previous week's high or low put in on a Wednesday or a Tuesday. It just does. Okay, and we'll come back. We'll do those other confluences. Yes, there was a wallet price. Matt, actually, no. I'm not going to qualify this as it, so we'll just leave that off. Fill this in. Oops, in. Okay, we're going to take our screenshot. We're going to do the caps lock F. Boom, we got our screenshot. That's already in the folder. We're just going to link this, link it. And there we go. There we go. There, boom. I got this. We check it out. Boom. Now we got our peak. Okay, so far, Asia's winning on this. EJ, look, EJ is pretty evenly spread out. You know, for the folks that are here, I did this for 2012. I did a full year, and UK. The London session, New York session, Asia, they're pretty spread out. It's one of the better pairs to trade if you want to trade swing. Although if you look at the past 3 months of EJ, you come to a very different conclusion. Sometimes you're gonna hit choppy waters, so to speak. So I do have let me take a couple questions here. I don't want to go too long. We do have a pre-market coming up. But I'm just going to look. Please don't ask any fresh questions. I'm just going to see if there's anything here pretty much at the end. But real quickly, if you want to take a screenshot of this, take a screenshot of this because everything plays out. Look at this mid-structure of a mid-structure, and it comes back up. We got our 1, 2, 3. Real quickly, I'm going to blow through all the confluences. We have triple divergence down here. We have the baseline divergence. Water's heading up. The baseline is starting to head back down. We have a trap through the previous week's high. When was the previous week's high put in? Oh, can you say a Friday? So we have now a head and shoulders. Do we have a moving average tug? Okay, the trend. Higher high, higher low. Higher high, higher low. Higher. Whoop. No, higher low. Yeah, okay, so that still doesn't qualify. We still had a higher low. Higher high. Boom. Now we get a retest of a higher low. There's no more new higher high. We have a wall of price that has been maintained. Aside from this gap or this drop down, this final candle, right? You can see the wall. Just let your brain parse out the noise. You can see the wall. The moving average has come up into this area. We got a moving average tug. We've created support. Now they've broken out of that support. Where am I looking for breakouts of support and resistance? I'm looking for a breakout of support on peak highs, breakout of resistance on peak lows. That's all I give a crap about. Other than that, resistance support means nothing to me. It's garbage. Within how I trade, right? See now, Steve, he does the box trade. He'll look for the box trade on the way down, right? He looks for it to pull back. For example, right here, he's looking for that resistance. He's looking, oh, there's that W. It comes back up into this area. Throw a pending up in there. Boom. He's not looking for breakouts to the long side, and he's also not looking for breakouts to the short side. But my methodology, I talk about the way I talk about how I trade, his methodology, not my methodology, but my style of trading, his method, is I notice, hey, you know what, during trends, short, they constantly throw you W's. So if this stuff breaks out to the short side, in context, I'm not talking about, if level 3, we're already in level 3 or peak. But no, if we're in a level 2 and we have a nice clean W, they've given us support resistance, starts to break out to the short side. With solid context, look at this. baseline shark fin. That's all I need. I'll continue that. That's where I'll utilize support and resistance in that regard. But the most valuable place is during a peak. The mid structure, the neckline of a Head and Shoulders, right? The middle of an M or W. That's all I care about. So this has this is great. This has everything, and that moving average tug has worked out. The blueberry came down into the region of previous trap volume, a lot of trap volume, because everybody saw this news. Okay, it's filling in this pin, right? So there's a lot of people going along here. They get to come up, reaffirm that directional bias from the retail traders, and then give you the entire scenario that I've repeated at least probably 36 times tonight, and then roll over. And of course, along the way, now we got the 1350, we got our H1. Whoops, I did not mean to hit that. Got our 1350 cross, H1 bounce. They bounce again. There's a whole slew of opportunity to scale in on this, but everything's beautiful. And what happens eventually? Let's go to the 4 hour. The entire larger structure does play out, and then we get our massive uptick. So we're going to get into all this next week. We'll do a little recap, little review, but there's so much damn good stuff going on in this entire structure. Okay, so I will leave it at that, and I will see you all. Oh, somebody popped in. Oh yeah, that's right. You're welcome, Dale. Appreciate it. All right, take care, Tram. Good to see you. You're welcome. All right. Noko, anybody who's interested in signing up, joining, just send an email to info@beatthemarketmaker.com. I had stated this in the beginning, but I know plenty of people come in at different times, so info@beatthemarketmaker.com. Just send an email into there. Give me like 24 hours or so to get to you. I am the only one that handles that backside stuff, and it kind of gets a bit nuts during these open houses, so please be patient. I will get back to you. Thank you so much, Ellie. You're welcome, Charlotte, Noma. Okay, everybody, I got to take a break for a little bit. We'll be back at 8:30 for tonight's pre-market, which I'll discuss what I'm projecting, at least for the rest of the week. All right, thank you so much for attending, and I will catch you then. Bye-bye.